Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. There were key data releases yesterday, starting with the US inflation number, the CPI. This is the data point which markets use to assess the path of the interest rates. The trade deficit from India, both exports and import numbers were lower than the previous month. Good morning, Pankaj. Great to have you back. How are you reading the current markets? We have had a bout of dollar weakness and a solid rally in gold. Your thoughts, please.
Hey, thanks, Swaraj. One data, according to me, which is a kind of a neutral, because if you look at the sticky portion of CPI data, which is a services number, and services number is still is 5.3% YOY. There is no downward pressure on services CPI. But since this data has come lower than expected MOM month on month, and one day before Powell, which had basically said that hot PPI is not a really actually a hot PPI, and he has hinted that Fed is more inclined towards a rate cut. People have lapped up this data with a very aggressive moves. Gold moved higher by $40. US yields moved lower by across the curve from 8 basis to 12 basis. Yen, which BOJ could not defend much even after selling $55 to $65 billion. Data has helped them. Yen has moved, strengthened. Dollar yen has moved lower by almost 2.5 big figures and is at 154 against dollar today. Equities moved up by 1% and probably the trend is likely to continue. Even if you look at the rate cut expectations, now the market has priced in almost 100% rate cut in September, and after that one in December. So overall, data has been taken as a very positive number for risk assets. We will probably watch it in coming days. Let me highlight another number also. Dollar index, which is currently at 104.20, is at 200 days moving exponential average. You also mentioned about trade deficit data in India. It's a kind of a worst trade deficit data since November 2023. I was just comparing the numbers with April 23, April 24 vis-a-vis April 23. Now the trade deficit has actually increased by $5 billion import. I will talk about only the import number currently. So import have been actually increased by $5 billion, primarily because 2.8 billion extra spending on a crude oil, which is actually higher than the last year, and a similarly 2.1 billion gold import. So this is contributing $5 billion extra import numbers vis-a-vis April 23. The number, which is more than $19 billion, is actually worse than the worst data since November 2023. Let me also bifurcate or slightly give a color on a services export number. The net services exports surplus USD 12.6 billion during the April 24, which is as compared to the average $13.6 billion in FY24. So we are seeing slightly slowdown in a services export, net services export number. My guess and my inference on this import number is that we are likely to see current account deficit more than 1% in FY25. That's the guess. So probably we'll be moving around $35 to $40 billion of a current account deficit. But there's a good amount of flows expected on both debt and equity. That should be neutralizing it. Coming to India, is basically India 10-year yield. My guess is that we'll be moving towards 705, and whether USD INR will break 83.35, we will probably see this is breaking during this week. On Monday, on Monday, May 20th, Bombay will be seeing election day. We might be not there on Monday 20th. I just want to give another color to the overall set of things in this world. We all believe that Ferrari is an auto company. According to Tamhora, according to many people, it's not an auto company, it's a luxury company. Last quarter data, all car companies have done badly. Ferrari is a company which has actually sold seven cars lesser than the previous quarter, but its earning was up 11% and EPS was up 20%. That's all from me. Thanks a lot.
Thank you, Pankaj. And that was a very, very colorful podcast today. And just quickly summarizing, services inflation, which is a key component markets have been tracking, doesn't seem to be budging. There was an aggressive interpretation about rate cuts, and that has resulted in a rally in equities in the US. Indian trade deficit number was quite negative. As Pankaj mentioned, there was extra spending on oil and gold, which has resulted in extra imports compared year on year. And so there was a slight slowdown in the services export number. That's it from us today. Thanks for listening. Tune in tomorrow where we discuss the latest in the financial markets.